Stephen, let's kick off with you. No to more hedging. Of course, Mark Utafani did a very good job of getting rid of that hedge book, and something that many people have actually been talking about for some time, and this is why they're reaping the benefits. But at these levels, where you see the gold price hitting new all-time highs, do you think that it is something that a gold company should be embarking on, or even thinking about?
No, I think investor sentiment is very much against hedging, and I think companies, especially the big companies, take a very hard look before they even think about hedging. The smaller ones, if they can't get loans from the bank except for a hedge, they have no option, they'll have to hedge. But the big companies, they don't need to do that. They can go to the bank. They're very liquid now at the moment, cash flow wise, so there is no need for them to do the hedging.
Okay, when Paulson and company bought up a stake in AngloGold Ashanti, a lot of investors raised their eyebrows and said, well, perhaps we should be looking at gold as an investment. I know you prefer physical to the likes of a company, but AngloGold Ashanti coming out with stellar results and costs coming in far lower than most had expected.
I think much in line with expected, possibly marginally better. No reason to get too excited though, because at current gold price levels it'd be a shock if they didn't have these kind of earnings. And clearly it's been profitable. Over the past year, distributable earnings to investors moved from minus $30 million to about over $711 million. So significant change, roughly about 70% up. But I don't think too much of a reason to get excited. I still prefer physical gold. If I was looking at an equity portfolio and looking to hold gold shares in that portfolio, I'd look at AngloGold and I'd look at Goldfields, really.
Okay, let's touch on the cash costs, and I think this is what the market is really talking about at this point in time. We know that they are set to rise going forward, but quite a feat, I would say, to try and get these cash costs down. We know that it's very difficult in this kind of environment. At $705 an ounce, clearly the margins there are incredible.
Yes, cash operating margins now is 53% for AngloGold Ashanti. There only was one bad spot in this results, and this was Australia with the flooding at Sunrise Dam. Now, if that didn't happen, we've seen the cash cost a lot lower from the 705 level. So yes, there's very strong cash flow. The companies, I think, is extremely cheap. AngloGold Ashanti is trading at about 30% discount to NAV at the spot gold price of about $660 an ounce. At the moment, that discount is even more. The question I have to ask myself is what's going to drive these companies? And at the moment, I can't see anything that's going to drive them, because cost is difficult to contain. The political situation in South Africa, strikes, all these things is adding up. So, and you can see that in the market today as well. But normal situation, and if the companies can keep up with their cost, containing the cost, and they're doing a very good job at the moment doing that, eventually these companies will perform.
A very important question when you say what is going to drive the company going forward. What about assets out of South Africa? That's what most people have been focusing on, and not only for AngloGold Ashanti, the likes of Goldfields, and of course Harmony has also been one of the favorites. Do you think that most of these traditionally known as gold companies, South African gold companies, are going to start diversifying in different geographies, and that's what's going to drive them?
Well, AngloGold Ashanti, only 40% of the production is from South Africa at the moment, and that's low cost production. So they're already diversified, and there is no reason why that company shouldn't rate in line with the counterparts like the Barracks and those companies. The other two is a bit of a difference. Goldfields has got old assets, and they've got a much bigger South African exposure. So for them to get a better rating is going to be tough. Harmony, we know the assets are really marginal. There is, I mean, any headwind and they'll make a loss. But they've got very good assets in Papua New Guinea. So the company that can get a better rating, there is no reason why they shouldn't get a better rating, is AngloGold Ashanti. So a person that's risk averse and wants to get gold exposure and want the gearing to the gold price, and that's an obvious choice for a person like that.
And of course, buying a stake recently in First Uranium as well, Kimon, it's quite fascinating to see that most of these gold companies are starting to look at diversifying not only against different geographies, but also perhaps delving into reprocessing plants and the like.
Certainly uranium's been one of those commodities that people have been looking at for about 5 years now, and want to get exposure. I think what they did was the right thing. I think the level of exposure is not significant, but it's significant enough to possibly make a difference to the bottom line in time.
Okay, so buy or not to buy AngloGold Ashanti? I know you said if you're risk averse, but would you be accumulating AngloGold?
Yes, I think at these levels, yes.
Yes, that's a yes.